I could put my money into an investment and I could lose that money, right? And the fact is, if you understand the concept of compounding interest being the eighth wonder of the world, you understand that the only thing you need to do to be successful is to contribute, be consistent, and not interrupt the growth. And anytime you have losses, you interrupt the growth. Anytime you have to pay taxes, you interrupt the growth. And so one of the things that's really important is to make sure you put your money in a compounding account that you have liquidity, use, and control of, and that's protected from losses that you can't lose. Hey, what's going on, cash flow hackers? It's Chris with Life 180. And for this video, I want to ask you and talk to you about the idea of if life insurance is a good investment or not. Now, to break this down, I guess what we need to do first and foremost is to break down the inner workings of permanent insurance versus term insurance, right? So I'm not going to get into the details of everything for this video, but to break it down simply, permanent insurance is basically insurance that covers your entire life and comes with other benefits. And one of those benefits being living benefits, which means there is cash accumulation inside of your policy. Meaning if you get a cash value policy, a whole life insurance policy specifically with a mutually held whole life insurance company, you are in effect a shareholder of that company and you get to participate in the dividends based on the profit that that company has, right? And so you will accumulate cash value inside of that policy. Now, I do want to warn people, there are different ways to design these whole life policies, so you need to make sure that you work with a professional who understands how to design them in the most efficient way possible for cash accumulation, not for insurance maximization. Those are, unless you have a really big need for insurance maximization, which very few people do or should be utilizing whole life insurance for that need, right? Now, the other need is if you have a big need for a lot of death benefit, I would say go out and get a term policy. Term insurance will cover exactly what it says, a term or a certain period of your life. You can buy term insurance with different periods, certain, so to speak, right? So you could buy a 10-year term policy, a 15-year term policy, a 20-year, a 30-year. You can buy annual renewable term. There's all sorts of different term policies that you have options for, but the bottom line is they're going to be cheaper because of the fact that they expire. And listen, nothing in life is free. These insurance companies, the actuaries, they know if they sell you insurance when you're 20, that it's going to be really cheap because the odds of you having something catastrophic happen to you are really low. But if let's say you're young and you have a family, you have kids, you have debt, you have things going on, having term insurance there to make sure that your family is protected is obviously the responsible thing to do, in my opinion. One of the big things that whether it's permanent insurance or term insurance, that I kind of stand behind is life insurance is not a need product. Life insurance is a want product, because let's face it, I don't buy life insurance for me. I buy life insurance for my wife. I buy life insurance for my kids and my wife, right? Because I want to make sure that what I want to happen will happen when I want it to happen, whether I'm here to see it or not, right? Like that's a big thing for me to understand, right? Like I need to know that if something, hopefully not when, but if something happens to me, unfortunately too soon, that my family can live the life that I'm trying to create for them and that I'm creating for them, right? I want to make sure that if life gets interrupted by my demise, that, their lifestyle doesn't follow suit, right? That is the intent of it. Now, when I'm dead, I'm dead. I mean, I'll hopefully, pray to God, be looking down from heaven, obviously, and I'll be able to look down proudly because they're taken care of and their life will be as I'm trying to design it for them, right? But it's not for me. That's for them. It's because I love them. It's the ultimate love product that you go out and you get it for the people that you care about, because you want to make sure that your responsibility for their well-being is executed no matter what happens. All right, so now I'm going to get off my soapbox about the permanent versus term and how important I think life insurance is in one way, shape, or form, depending on where it fits into your life. I do think it's an extremely important foundational asset that you should have, or coverage that you should have in your life. The question really comes down to the fact, and the title of this video is life insurance a good investment? And so from that perspective, I'm going to tell you life insurance is a horrible investment. In fact, I will tell you life insurance shouldn't even be looked at in the same category with other investments. And here's why I say that. If you look at the long-term internal rates of return of whole life insurance over a 20-year period of time, you're going to see that the rates of return, internal rate of return for a whole life policy is going to be anywhere between 3.5% and 5%, give or take, right? And so if you look at that and you compare that to an investment return, then it's not even in the ballpark, right? Like a lot of investments, you can get a much better return. Now, if you wanted to compare a 4% or a 5% return to a mutual fund that's in a taxable account, I could show you the argument that whole life insurance is actually extremely strong as an investment. But the reason I say whole life insurance is not a good investment because it's not an investment at all. It doesn't share the same characteristics. What I say is life insurance is a great savings alternative. And if you're looking at life insurance as an investment, A, you're looking at it improperly. B, you're missing the boat and you're missing opportunity. And here's why. The biggest mistake that people make is that they spend too much time and energy, I should say, planning and investing for their future. One of the biggest challenges people have bought into, one of the biggest lies people have bought into, especially young people, is that the younger you are, the more risk you can take. And the reason I say life insurance is not an investment is because it doesn't have the same risk profile that investments have. I could put my money into an investment and I could lose that money, right? And the fact is, if you understand the concept of compounding interest being the eighth wonder of the world, you understand that the only thing you need to do to be successful is to contribute, be consistent, and not interrupt the growth. And anytime you have losses, you interrupt the growth. Anytime you have to pay taxes, you interrupt the growth. And so one of the things that's really important is to make sure you put your money in a compounding account that you have liquidity, use, and control of, and that's protected from losses that you can't lose, right? And so that's where whole life insurance comes into play, right? It's not an investment because you can't lose the money. The only way you lose is if you don't participate and you don't fund it, right? So if you know you're going to participate, if you believe that you need to be saving money, not investing money, but saving money, now you can capitalize up an account, a savings account for emergency. Here's the thing that blows my mind. I talk to most people, and most people say, if I were to ask you, do you need an emergency fund? You're probably going to say, Chris, yes, I should probably have an emergency fund. Okay, how much time, how much should you have in your emergency account? Most people are going to tell me, well, I probably, based on what people said, should have about 6 months of income in expenses inside of my emergency account. That's what most people are going to say. And then if I say, well, do you have that? You're going to say, no. What would you do if you had an emergency? Well, I have money in a 401k. I have money in stocks. I have money here or there, any kind of investment. But the problem is, when do people run into emergencies historically? They run into these emergencies historically when the market is going through a down cycle. Right? We live in these boom bust cycles, right? So when we go through a bust cycle is when most people run into emergencies. Let's face it, when the economy's good and the job market is good and things are just humming along, we don't worry about it. We get a little lackadaisical about financial structure and design. And so we need to make sure that we're prepared for that down cycle. Now, if you're planning on leveraging your investments, what's going to happen is you're going to have to liquidate negatively performing stocks, mutual funds, other types of investments. When you liquidate a negatively performing asset, you compound the problem. And what happens is you can literally take 10 years of good results and eliminate them overnight. And the reason I say this is so important is because, and the reason I love whole life insurance and don't look at it as an investment is because I look at it as a savings vehicle, and you can use it for an emergency account and you can use it as an opportunity fund. I believe the biggest lie people are told is the younger you are, the more risk you can take. Because while that may be true and it makes sense to a lot of people logically, I'm here to tell you the younger you are, the less risk you should take and the less risk you need to take, because you have time, you have the ability to compound, and you have the ability to contribute on a consistent basis year after year without fail to get where you want to go. And if you do that, you can actually build the financial foundation of your life so you are prepared for those opportunities. And now when everybody else is having to, liquidate these negatively performing assets during down economies, during market corrections, you're going to be sitting there with an opportunity fund and doing what Warren Buffett says, which is make money when there's blood in the streets and take advantage of it. And you're going to catapult your wealth ahead. And that is where real wealth is created. If you want to achieve significant results, if you want to just blow the doors off of all your friends, off of all the results of the people that are, sitting at the water cooler at work or maybe on Zoom meetings at this point in time and having conversations about the portfolios that they're getting, the 10% returns, the 15% returns, the things that are going on, I would say sit back and just save, be conservative, and wait for the next down cycle. Because guess what? We're 12 years into a bull run right now in the stock market, and history tells me, and guess what? History has a habit of repeating itself. History has a habit of repeating itself and tells me that this correction is sooner than it, is right around the corner is all I can say. I don't know when it's going to happen. I'm not going to try to time it out, but I will say I believe it's right around the corner. And what you do between now and when it happens, if it's 6 months from now or 18 months from now or 24 months from now or 3 years from now, guess what? It doesn't matter. But the upside potential of buying and investing when the markets are at all-time highs in every way, shape, or form, the upside potential, the growth of that is marginal compared to the downside risk of what the next correction is going to look like. So I'm a big believer that right now, you should be utilizing life insurance as a storage vehicle, as a storage of capital, as a way to guarantee your money. You want to make sure you design it the right way. You want to make sure that you don't use index universal life because you're going to have surrender schedules. You're not going to have access to a lot of money. There's a lot of things in the fees and the risks that go along with that, but you want to utilize a whole life insurance company with a mutually held company with a cash value policy that's going to give you high liquidity in these policies. That way you can take advantage of opportunity when it presents yourself. So, and that right there, if you do that and you focus on saving and protecting your preservation, I should say, of your capital is the most important part right now. Because if you could preserve that capital and you can kind of put it in an account that will hedge it against inflation, which whole life does because the dividend rates go up and down with inflation over a long period of time. And there's been 150 years to show that to be true consistently, then you're going to be able to take advantage of this next market opportunity. And my question to you is, at this point in time, do you want to be prepared for the next opportunity and to be able to thrive through it and take advantage of opportunity and have an opportunity fund and an emergency account all wrapped into one and protect your family and your goals all at the same time, even if it's your business, right? Do you want that? Or do you want to have your money in accounts that are highly leveraged, highly at risk? And you know what? Like when the market goes down, you're going to lose a good percentage of your wealth and possibly have to tap in and make the problem worse, access that capital during times of need and hardship, right? So to me, it's a no-brainer. I look at this. If you haven't set your financial life up and watched the Life 180 Financial Pyramid video, it explains everything I'm talking about in great detail. It's about a 25-minute video. I really encourage everybody to watch it. Go above. I think I'll put the link up above. You can check it out. Go check that video out. I really encourage everybody to do that. But if you haven't already, make sure you subscribe to this channel. Hit the bell. That way you get notified every time I launch a new video. I've got a lot of great education coming out. Just launched our book, Cash Flow Hacking, which really, you want to get financially free faster. It will walk you through how you can hit financial freedom regardless of where you are now, what your level of expertise is, how much money you have saved, and it can help you get there in a decade or so. I'm telling you, it's a no-brainer. Check it out. Make sure you subscribe. If you have any questions at all, comment in the comment section below. I'll do my best to engage with every single one of them. And until next video, have a blessed, inspirational day, and we'll talk soon. See ya.